Dogecoin, the joke Bitcoin rival Shilled by Elon Musk, that wasn't so funny after all. Elon Musk has been conspicuously quiet about Dogecoin in recent weeks, tweeting his endorsement of a change to its fee structure, but otherwise avoiding any mention of the cryptocurrency on his feed. Small wonder, the Shiba Inu-themed coin launched in 2013 as a joke, but rocketed to fame earlier this year by the Tesla CEO has crashed harder and faster than most of its peers during the current downturn, which has wiped more than $1 trillion off the combined market cap of all cryptocurrencies. Dogecoin was trading at $0.192 on the Bittrex exchange at 13:30 EDT on Tuesday, reflecting a 74% collapse in price from its all-time high on May 8. Bitcoin was down 50% and Ethereum was down 56% in the same period. Support for the joke cryptocurrency remained strong on social media channels, with members of the self-professed Doge Army noting that it is still the 8th largest coin by market cap. Altcoins are generally considered more volatile than Bitcoin, experiencing steeper price swings to both the upside and the downside. But Musk's reluctance to rally the troops, many of whom were introduced to Dogecoin by him, betrays a dawning realization that the 8-year-old joke is, well, getting old. Critics of the cryptocurrency have long contended that it has no utility and no prospect of mainstream adoption, and not just because it's a meme. More for you. Coinbase co-founder issues serious crypto price warning as Bitcoin "death cross fear spreads." After Elon Musk sparked a Dogecoin boom, Ethereum co-founder and Cardano creator calls for Doge price "floor upgrade." Bitcoin downtrend continues amid inflation fears and China clampdown, but traders eye key support level at $30k. Dogecoin's massive bull run from $0.05 at the beginning of the year to $0.739 last month was driven almost entirely by celebrities such as Musk and Snoop Dogg tweeting their support for the token. The endorsements struck a chord with a new generation of retail investors who were emboldened by the Wall Street Bets movement on Reddit, and who had greater access to cryptocurrencies than ever before thanks to apps like Robinhood. Few of these investors spared a thought for Dogecoin's tokenomic support mantle of token and economics, which encompasses the technical innovation and monetary policy underpinning a cryptocurrency. In the cold hard light of market sell-off, that indifference now looks costly. Here's why. Inflationary supply. Unlike Bitcoin, which has a permanently fixed supply of 21-meter coins, Dogecoin is an inflationary token with an ever-increasing supply. Its inflation rate is programmed to fall over time, but currently involves 15-meter coins being minted every day, joining 130 billion already in circulation. What many Dogecoin supporters don't realize is that this supply structure was part and parcel of the joke back in 2013. Dogecoin was amusing, not just because of its logo, but because its money supply was fundamentally and purposefully designed to erode value over time. Hence the community's self-deprecating slogans, such as much coin, very money, weak network security. Cryptocurrencies such as Dogecoin and Bitcoin do not have a central authority to authenticate transactions, but instead rely on multiple copies of a shared ledger that keeps a record of all the activity on the network. This ledger is updated by miners who solve complex mathematical problems in an effort to be the first to confirm new transactions. Doing so wins them a reward. The more complex the problems, the higher the computational power or hash rate supporting the network, and the harder it becomes to disrupt bookkeeping with a so-called 51% attack. Dogecoin lags far behind Bitcoin when comparing hash rates. So much so, in fact, that its relative performance is invisible to the naked eye on a comparison chart. Network security is also enhanced by the number of full nodes or complete copies of the ledger that are connected to the internet to help with verifying transactions. At the time of writing, Bitcoin has about 6 times as many nodes as Dogecoin. 8,347 versus 1,400. Minimal development. Musk was widely mocked last month when he claimed via a tweet that he was working with Doge devs to improve system transaction efficiency. Skeptics quickly pointed out that the coin's GitHub page, a repository for project developers, has been all but dead since 2017. This, again, is no surprise. Dogecoin's original programming code was copied with minor tweaks from Litecoin itself, a copy of Bitcoin in about 3 hours, according to co-creator Billy Marcus. From March 2014, updates to its code have been lifted directly from Bitcoin's GitHub, according to developer Maximilian Keller. Development may have picked up this year, but the simple reality is that Dogecoin is a crudely modified, under-engineered ripoff of Bitcoin. In April, Musk promised to put a literal Dogecoin on the literal moon with the help of his private rocket company, SpaceX, a reference to iconic price meme popularized by Bitcoin's early supporters. He will need to do much more than that if Dogecoin is to live up to his followers' expectations.